An interesting finding out of Redfin's predictions for home sales in 2023 released today. Now, home prices will see their first year-over-year decline in a decade, and home sales will fall to their lowest level since 2011. Well, here with more on the future of housing is Marc Norman, Associate Dean of the Schack Institute of Real Estate at NYU School of Professional Studies. Good to have you on. So I first want to get your take on these findings from Redfin. Are you seeing trends going in that same direction?
We are seeing trends go in that same direction. Thank you for having me, by the way. But at the same time, we have a supply problem with housing. So there's still so much housing that's out of reach for Americans that we'll see the price declines, but I think the income gains that we're seeing lately still aren't keeping up with the prices that we're seeing in the market, in most markets.
And as you mentioned that supply issue, then how much imbalance is there between the buyers and sellers' demand and selling right now?
Yeah, I mean, it's really interesting because there's been this sort of uptick, but we, for the last 20 years, have underbuilt the housing. I think the housing crisis actually exacerbated that. In 2008, right, we saw the sort of demand go down, but it never came back in terms of supply. And now that we're in this inflationary environment, I feel like we're in a place where the housing can't keep up with the demand. So even though we see this decline in prices, I don't know that we see more people that can actually afford houses. And that's really the issue right now.
Because there really was that fear coming out of the housing crisis that led to the underbuilding, really not sure what was going to happen with the housing market. But I want to ask you, in terms of policy-wise, is there something, whether it's zoning or other ways, that could help perhaps alleviate some of these stresses?
Yeah, I mean, I think there are a couple of things, and I think it's interesting because it's less on the federal level and more on the state and city level, and that's trying to increase that supply and also trying to sort of ease some of the restrictions on builders so that housing can be built quicker. So that at our current capital markets conference, the mayor of New York announced, a number of different ways that they might work to speed housing. We're also seeing in places like California this switch to allow multifamily units in single family neighborhoods. And then we also see alternative lenders coming in to say, we'll actually, evaluate buyers in different ways than the traditional market might. So maybe not looking at a steady income over time, but creating a space so that those gig workers and contract workers that might have steady incomes, but not as legible as a standard worker might be able to have access to housing in ways that the banks aren't really underwriting.
And that could be a real game changer because we know how tough it is for first-time home buyers at the moment. And even when you look at mortgage rates, we're seeing that the average 30-year fix has roughly doubled from the start of the year. What are your expectations going into 2023 in terms of affordability and what we might see with mortgage rates?
Yeah, I mean, I think mortgage rates are going to stay high. And actually, when I say high, they're going to go back to probably what's a new normal, right? I think we really got used to a low interest rate environment over the last 12 years. But if we look at the last 30, we're actually coming into a place that's more in line with traditional mortgage rates. But I think we have to get used to that. It's going to take probably a number of years for prices and housing stock to adjust to that kind of mortgage environment. But the 6 to 7% interest rate isn't an anomaly unless you're just looking back at that last 10 years. I think one of the other things, though, is that we don't build starter homes in the way we used to. So homes got bigger, prices increased, and the market met it there. But that really put housing out of reach for a lot of first-time buyers, especially.
And Marc, I do want to ask you about the rental market, because obviously renters also being squeezed as there isn't enough supply for them to be able to get into houses. What are your expectations there? And any sort of policy things? We know that in parts of Asia and Europe, there are some regulations on rent growth that could help people. Anything that potentially could help here in the US?
Yeah, I mean, once again, it's so city by city in the sense of, right, California, New York have rent stabilization programs that might keep the sort of inflation in rents in check, but also might constrain supply. Other places you don't have those sort of limitations on, how rents can increase. But you also, in places like Texas, actually have that increasing supply that keep prices relatively stable, except of course hot markets like Austin and now Dallas. But it really is a matter of supply. And to the extent that we don't have the supply, I think we need the supports. We're also seeing those supports, some of those supports diminish, right? So the eviction moratoria or the pandemic programs that helped renters get through this period are going to be expiring. So I think we're going to see a little pain in the housing markets for a while, especially among the low and moderate income renters and borrowers for mortgages.
Tough times ahead indeed. A big thank you for joining us, Marc Norman, Associate Dean of the Schack Institute of Real Estate at NYU. Thank you for bringing your insights.